Hi. We have a lot of clients that are public bodies, universities, FE colleges, housing associations. So how do these regulations apply to them? Do we
if you've got a... There is a slide, actually. Just go back. I think I went over it, but there is a slide where certain organisations would, by their very nature, be deemed to be low risk. Okay, I'm just seeing whether... Okay, yeah. So the regulations appreciate or acknowledge that certain bodies, certain organisations, certain clients are going to be low risk, okay, because of their very nature. So I'll give you an example. Maybe if you act for any credit or financial institutions, then that would be low risk, which is a bit of a joke considering what's happened in the last few years, but that would be low risk because they already subject themselves to the money laundering regulations, okay? So what they're saying is because they already subject themselves, they should be compliant, which means you don't have to then consider them high risk. Another one there is UK public authorities, okay, which may or may not cover, I think, what you suggested. So if you do act for a local authority, then they are specifically listed in the guidance and the regulation to say that they would require simplified due diligence. Okay, so you could just treat them as low risk. I'll just come back to this slide as well. I've mentioned, the gentleman here mentioned that first point, you know, enhanced due diligence is required if a client is not physically present. And then also if you come across a politically exposed person, which is basically someone who is interested in a prominent position, a political position in a state other than the UK, which again, I don't know how often you're going to come across such a position, maybe an ambassador or a head of state, etc. But they would automatically be high risk as well. Okay, it doesn't necessarily refer to UK politicians though, so they're assuming they're saying UK politicians aren't high risk, but non-UK are. But interesting one, Tony. But yeah, good question.
Over the years I've been in practice, I've turned away many potential clients after interviewing them, and they failed my compliance tests.
Yeah.
Even before all this lot came in.
Yeah.
You know, when they won't let me contact their previous accountant,
okay.
when I can't find out where they got the money from to start a business, when they want two sets of accounts, one for the building society and one for the tax man, I show them the door.
Yeah.
Yeah. Now, I have never reported them. I've just shown them the door. I've never kept anything. Some of them might find me in yellow pages and I've only got their name. They come in.
Yeah.
So what do I do there? I put my hand up. I've never reported them. I've just shown them the door.
The regulations, in terms of whether you need to make a report on a client, well, not necessarily a client, but even a future client, is you need to report anything which comes to your attention, to your knowledge, in the normal course of your business. So that suggests that if you see someone comes as a prospective new client, he's not your client, but still it's come to your attention in your normal course of business. So, but saying that, if you have, what information have you got to report? Like you said, you've probably got a name, you don't know if that name's true, fictitious, whatever. Probably haven't got his company name, you've got no address details. So you could argue that, okay, what he said suggested maybe there, you may take a view that he did commit, he's intended to commit a money laundering offence, but have you got sufficient information to pass on to the authorities? So that might be what you conclude that you haven't, which is why you didn't do anything. But certainly just be aware that it's not just on clients; it's on anything which comes to your attention in your normal course of business. Okay, so it does include new clients, potential new clients. Okay, so if you have got a situation where you see a new client and you have sufficient information on them and you feel a report is required because you have knowledge, suspicion, or reasonable grounds for suspicion, then you should consider a report as well. Yeah.
I have some clients for whom we don't do any accounting or bookkeeping. We do training, IT, helping them set up their systems and their records, but we're not even looking at their accounts or their books. Now, I have never considered it necessary to regard them as a client for whom we should do due diligence.
Oh, yeah. What do you do?
Comment.
Well, firstly, I'm trying to think this through. I mean, firstly, you are part of a regulated sector, being an ASP, an accountancy service provider. And as far as I'm aware, you presumably you're taking a fee for doing what you're doing.
Yes. Yeah. I'm not doing it for free.
No, you're not a charity, no. I would assume that they would still be part of the customer due diligence, because I can't see, just because it's not a tax return and traditional accountancy services, It's interesting. I can certainly try and look into it for you. But
do IT consultants don't have to register?
I don't think they're part of they're not part of any of the sectors, no. But my gut instinct is you probably would, because they are a client of you and you are part of a regulated sector. You know, I don't think the legislation, I'll have to refer back to it, I don't think it specifically lists what services are required as part of a customer diligence. I just think it's if you're part of a regulated sector, i.e. you're an accountancy service provider, then you would then have to be compliant with the whole regulations, therefore presumably have to carry out due diligence on every client. But I'll take your details and I'll certainly make a few phone calls and see if I can find out for you.
Because, you know, if you're just doing a few hours work for somebody and then quite possibly not see them again, it becomes quite ridiculous amount of effort.
I've got to say, my gut reaction is you probably would have to do something on them, but I'll have to, certainly haven't come across that question before, so yeah, I'll have to look into it and get back to you. Okay.
Hello, yeah, just a quick question on the de minimis limit. I understand for the Republic of Ireland there's a limit of €1,500. Do you know how we're expected to deal with obviously things that we would consider very trivial? For example, again, client claims 10% motor expenses, we think it might be 15%.
See, the trouble is, I said before to that gentleman there, that the legislation is quite poorly drafted and one thing regarding that is there is no de minimis limit. So in that example, if someone's presumably, even if someone's not declaring 20p worth of bank interest a year, I mean, potentially, actually, but then you need to, you may decide to take a common sense approach to it on the view that I didn't report it because it was.
So we should be all right if we use common sense and just document it.
Well, I don't know. The regulations say there's no de minimis limit, but I mean, if you're in practice, you may take a view. Otherwise, you'd end up reporting a lot of people and do so
every single one.
A lot of people who are not paying 20% income tax on 10p of interest, whatever whatever it is. Okay, but the point is, there's no de minimis limit.
I got a client who's a fine arts dealer, so in itself it's quite high risk. But the investor of the business is the owner's sort of girlfriend, their parents, in America, and the funds are brought in from America. And I've got their a name and address in America, an email address, but is that enough?
Okay, so one of the shareholders, you'd say, the investor, is he a shareholder? Or
not
just
no,
no,
just the.
Okay, I suppose really the way you need to look at that is if these funds are being introduced into the company, you just need to be satisfied that they are coming in a, I suppose, on a legitimate basis by legitimate means. So what sort of, again, I'll talk to you in a bit more detail, but you just really probably need to have ask the right questions at the end of the year meeting if you come and, whatever meeting you have with them, and just see whether you can get additional information to support that the funds come from this outside or
they're
this
transferred
investor.
into the, company bank accounts directly from their account in America. So
Okay. I mean, could you get, for instance, documentation from whoever does the accountant in America just to confirm that they are being introduced? That sort of thing you need to, logically need to think about it. You just need to get perhaps some information on your file to say that you have thought about it and you've asked a few questions, and also you've also tried to get additional information on them.
I know the person exists. He's like on LinkedIn. When you go on LinkedIn, he says.
Well, it's little things like that you just need to make a note of. That the fact that there is a profile on LinkedIn, probably won't rely just on that. But you said there's other things as well, didn't you, that you have on file. But also applies not necessarily just to fine arts dealers, but if you've got a client who maybe has introduced 10, 15, 20 grand into his loan account or just into the company, you ask the question, where's that come from, my remortgage my property? I don't think it'd be unreasonable to say, okay, can you just provide us with something from a building society, the mortgage company, just to show that has been remortgaged? That's similar, sort of following from your question really. You just need to satisfy yourself at any funds which have been introduced into a company from outside sources. You've asked a question, you've maybe got some information to support their source. Okay.
So I got the scenario where I prepared a set of accounts, spotted an error on one of the VAT returns, says a couple of £1,000 owing.
Yeah.
So I tell the client, look, you need to put this right on the next VAT return, and if you don't, I'll do a report to soccer.
Yeah, I think
is that tipping off?
I think that's a simple. Yeah. Yeah.
No, I didn't say I would do one. I said I might do one.
Yeah. Now that's again, that'd be something it wouldn't be advisable to to do. Yeah. But I mean, yeah, you've got to be careful that any situation like that, where you're giving them the impression that because they don't put things right, you're going to have to make a report. You don't necessarily need to say it, do you? You know, you just. I mean, one question I suppose following on from that, if they don't decide to, so simple questions got quite complicated. If they don't decide to put their affairs right, I suppose you've got a decision then. What do you do? Do you submit that report or return, or do you take a moral stance, say I don't want to act for that client anymore? And if you cease to act for them, you've got to be careful when you're in your disengagement that you don't give away the reason for your. So it's just a problem, really, isn't it? If you yourselves, you need to find balance with it, striking the right balance in terms of finding enough information out about a particular potential offence, but without tipping off the client while you're asking them questions. You know.
A question on ownership and beneficial control. How much part does control take as opposed to simple shareholdings, etc.? Situations where we're all aware of shadow directors, we're all aware of people who are effectively controlling the business, don't own any shares, are not related, apparently have nothing whatsoever, but yet they're always the go-to guy. Should we be extending our checks to the person we're constantly dealing with?
It's a good question, Tony. I mean, again, if you're trying to refer back to what I said, I mean, there's a requirement to identify your clients, but I'm guessing you wouldn't be necessarily preparing a tax return for this shadow director. So it wouldn't be a client on that score. You need to identify beneficial owners where the guidance states 25%, at least 25% of the voting capital, 25% voting rights, 25% share capital. So again, that wouldn't fit into that category. But then you do need to understand where the control lies in the business. So that wouldn't, again, I'll have to come back to you to confirm, but it wouldn't necessarily be restricted just to that 25% criteria. You know, if you feel there is a shadow director who has influence, control in running the business, marketing the business, etc., day-to-day activities, you may take the view that you also wish to carry out some due diligence on him. Okay. What I don't know, Tony, is whether that's best practice or whether it's a statutory requirement, which is what I'll find out for you.
I mean, basically, the thing is, if someone you believe has control, extend your checks to that particular person.
I think the key is, that firstly you appreciate or you've done due diligence to ascertain that they are a controlling party, even though they're not a director, not a shareholder. So that's the first thing. That's the first thing which will obviously go in your favour, that you've identified all the key players. The only question in my mind is whether there's a legal requirement to actually do anything on that client's identity, whether you should then ask him for a passport, driver licence, utility bill. Again, it's a question I've not been put before, but certainly from reading the regulations as they're written, I wouldn't say that you'd have to do due diligence on that particular client, on that particular individual, i.e. ask for passport, driving licence, etc. But best practice is something else, isn't it? Whether you
best practice would indicate. I mean, if they're the go-to guy, we're not supposed to know what relationship there is between them and the rest of the board or the shareholders. I suppose you'd certainly ask a few questions of a director, whoever your point of contact is why they are not listed as the director. Is it because they've been struck off, and that might suggest why they've been struck off for? So it's more and more questions get asked, then, don't they? But you'll have to find out whether there's a legal requirement